Hey everyone, welcome back to the channel. Today we are going to dive into the wild world of meme stocks. Remember those epic battles fought over GameStop, fueled by the Reddit forums? Yes, those.
Somebody had to do it.
We were recently reminded of those again when Truth Social had its IPO with the ticker symbol of DJT.
Volatility might be returning to some parts of the market. Reddit and Trump media, two of the big movers today. So could this signal a new wave of meme stocks?
While the stories can be epic and very exciting to talk about, meme stock are in fact very risky game. So before you decide to put all your savings in DJT, let's discuss 7 reasons why you may want to hit brakes. Do you remember the meteoric rise of Bed Bath & Beyond in 2023? The stock price skyrocketed, largely due to social media buzz and some rumors, like the rumor that Ryan Cohen, which was a favorite of meme stock crowd, has taken a stake in Bed Bath & Beyond, which was partially true as well. But this price rise quickly fizzled when the reality of Bed Bath & Beyond's struggling business model trickled in. But for some time, this was a classic example of hype outpacing fundamentals. And of course, Ryan sold his stock and made profits. Do you remember the wild swing in GameStop stock price during January 2021? The price went from just about $20 to $500 in a matter of days, before of course plummeting back down. Notice how GameStop's share price went straight to the moon, but then came back down pretty much to the same level before all this Reddit saga unfolded. It is very likely that many retail investors, which were a bit late to the party, got burned in the process. See, this kind of volatility can be exhilarating, fun, until you're losing half your money in just one afternoon. Then it's no longer fun. So let's first understand what is short squeeze. So a short squeeze can happen when many investors first they short the stock. That simply means they are betting that its price is going to go down. And how do they do that bet? They actually sell the stock at today's price, hoping that its price will go down in near future when they can buy it and close out their position. So if you're buying in future at a lower price, but they have already sold it at a higher price today, they hope to make a profit. But imagine what happens is that the stock price goes up instead and keeps going up. This causes at least some of those short sellers to rush and buy the stock before the price goes up too much. They need to cover their position because they have already sold this stock. Now, because all these short sellers are trying to buy the stock, there is more demand to the stock and the price goes up even further. That causes even more short sellers to come and try and buy the stock before the price goes further up. Now, this constant rush of sellers trying to buy the stock while it's rising can cause the price to rise very fast, very quickly. This is known as short squeeze. It is the whole short squeeze thing that made GameStop famous. But it's very rare and depends on a lot of factors beyond your control. The situation with GameStop was very unique. The share already had very high short interest and some people were able to take advantage of that. Trying to replicate the same with another meme stock is pure gamble. It's not a strategy. I'm sure you've heard about or remember the battle between retail investors and the hedge funds during the GameStop days. It was indeed a David versus Goliath story for the ages. But let's be real, Goliath does have a lot of extra resources. Hedge funds have complicated advanced algorithms and deep pockets that retail investors simply can't compete with. And what happens during GameStop days? When it appeared that retail investors have banded together and finally for once are going to have an upper hand on hedge funds, something very predictable happened. Suddenly brokers like Robinhood suspended the ability for people to buy stocks like GameStop. And you know what? No such restrictions were put on big players like the hedge funds. It indeed was rigged. Remember, not everyone on internet has your best interest at heart. You should particularly be wary of any online hype that seems too good to be true, especially if they involve lesser known companies. Even the SEC issued this warning last year about possibility of manipulation in certain meme stocks. In this another instance, the SEC actually busted a scheme and charged a group of online influencers. What these influencers were doing is that they were encouraging their followers to buy a certain group of stocks. They're hyping it up. While in the background, they were selling the same stocks and making a good profit on it. While meme stocks might be flashy, they're plenty of other companies which are very well established and have a proven track record. Don't be so distracted by the latest shining objects that you miss out on these companies with proven track records of growth. How? Don't let FOMO cloud your judgment. Remember, investing should be based on well thought out strategy and thorough research, not just on the latest Reddit post or the viral tweet. Focus on building a well-diversified portfolio for the long haul. Meme stocks might be fun for a quick gamble, but they can never be a long-term wealth-building strategy. Investing in good quality stocks and holding them for a long period of time is one of the best wealth-building strategy that is out there.
We all have a great story to tell.
See, a meme stock's value is typically a result of hype on social media and not necessarily tied to company's potential or performance. See, there is potential for some crazy gains, but what is more likely is an investor suffering major losses as the stock becomes overvalued and its price suddenly plummets. As a responsible investor, you're better off in avoiding them totally in your portfolio. If you want to really grow your wealth, check out this other video that I have made. Thank you for watching this video through. I would really love it if you subscribe to this channel. Doesn't cost you much, but helps me immensely. Thank you for watching. See you next time.